Hello, everyone. I'm Serge from ALECA Talks, and welcome back. It's a podcast for leaders of a sustainable future. Today, I welcome Mr. Angelo Chirulli, founder of Vectigalis Tax, international tax specialist, lecturer with the UK Chartered Institute of Taxation, and someone who spent his career working across multiple countries, jurisdictions, and regulatory environments. Angelo advises businesses on everything from cross-border taxation and mergers and acquisitions, even ESG governance, a little bit of international compliance, sustainable investment. It's a fascinating area, which is why we have him on the podcast. And most business leaders don't fully appreciate until they're faced with it themselves. So I think Angelo's in a great space. So welcome. Thank you for joining us, Angelo.
Thank you very much for the opportunity, Serge. Thank you.
All right, no worries. So I'd love to start with your story because it's quite an interesting one. You've worked across a number of countries, starting in Italy, the US, Costa Rica, Spain, I think Malta. Now you've set some roots somewhat in the UK. Looking back, what first attracted you to tax? And what made you decide to build an international career rather than staying within one country?
So it's a good question. For me, tax was interesting. It is interesting because it's one of the few areas when you can see how a country thinks about business, about investment, about fairness, about risk, and about behavior. So when you are young, you often think it's mainly about numbers and compliance and maybe it's boring. Then as you work with real client, you realize that it's much wider than that because a tax system, if you check properly, tells you what a country wants to encourage, what it wants to discourage, what is worried about, and how it expects business and individuals behave. So if you compare system across country, the difference becomes even more interesting. The same business model, the same family situation, or the same transaction can produce completely different outcome depending on where the relevant people asset, the risk, and also the decision are located. And I think this is what drew me in. I like the technical discipline, of course, but I also liked from the very start of my career the international dimension. I like the fact that you have to understand law, accounting, finance, treaty interpretation, and a lot is connected to the human behavior at the same time. It is a demanding work, but I've never been bored in all my life, at least at work.
Great. You said law. Were you ever considering to become a lawyer? Was that ever on the books?
No. The thing that I got a master's degree in economics, then I had a master in business administration, post degree in economics, and then all the qualification in Italy and UK. And now I'm dual qualified in Italy and in UK, but of course I practice in UK.
Because the remit of accountants, you have to have very broad shoulders, of course, because a lot of things fall on your plate, especially international tax from an accounting point of view. How different are the tax systems between the countries now? Do you spend a lot of time kind of bridging documents between countries, I imagine, or how does that work? Are they quite different?
They are quite different. Just to give you an example, Italy is a civil law country and the UK is a common law country. So this means also that the way they look at things, but even the penalties that you can suffer if you don't pay tax are based on completely different concepts. I personally started from an Italian background, and this gives to you a particular kind of training because Italy has a very sophisticated legal and tax culture. Is detailed, is formal, sometimes, as we know, is difficult, but it teaches you very early that precision matter and so on. But I didn't want to understand only one system, so I want to understand how different system thinks. So I work international, United States, Costa Rica, Malta, Italy, and then UK. And I think that the real challenge in international tax is not memorizing the domestic rule in different countries. The real challenge is understanding how the rule interacts when a client is living, is investing, is selling, is expanding or holding asset across more than one jurisdiction. This is the real challenge. You are right, you have to study technically every day, but the thing is that you can have major problem because one country might see you as a person as resident, another country might also claiming taxing rights and so on. Then you need to find a solution. Of course, we are not magician, but it's important that you understand that this is the type of work where you have to study every day, something changed, and so on. And this international journey was very important for me because it taught me not to assume that an answer in one jurisdiction will automatically work somewhere else. It also taught me that good advice need translation, not just translation of language, but translation of concepts. When you talk with an expat that is the first time that moves in a particular country, you need to be careful about what you said because you need to give the right advice with the right word. And for this reason, you are never bored.
Yeah. No, that sounds like a challenging space to navigate and to kind of find your way through. You worked in so many countries and you arrived at the UK. What made you establish yourself professionally in the UK?
Yeah, I'm in UK from September 2013. I'm a British citizen now, and I have to say that was a major step for me because I think that is one of the most important tax and financial centers in the world. It is also a very competitive professional market. So when you arrive here, you have to build credibility. You cannot simply rely on what you have done elsewhere. You need to understand the UK system properly, understand the expectation of UK client, and understand how UK advisor communicate. I found that challenging, I have to say, but also very positive because the UK rewards technical ability, but it also rewards clarity. So client here want you to know the legislation, but they also want you to get to the point. They want to understand the commercial implication, and that suits me because I always believe that technical sophistication and practical communication should go together. If you are not able to explain something, probably you don't understand something, and so on. So, and becoming established in the UK also changed the type of work I was doing. The UK is often a hub jurisdiction. You have inbound investment, outbound expansion, international family, and so on. It is a natural place, in my opinion, to practice international tax because so many client situations have a UK connection, but the answer is rarely only a UK answer. And as I said, over time I become British, and this has a personal meaning as well as a professional one. I still have my Italian background and qualification, but I think that UK is now part of my professional identity. And I find this combination as valuable because many of my clients are dealing with exactly the kind of cross-border reality. More than one country, more than one legal culture, and more than one tax system.
Yeah, well, that brings me to my second point. Like most people hear international tax and they think it's only relevant to very large multinational corporations. But in reality, what does your typical client look like? You mentioned expats. Who do you typically work with?
So I work cross-border with various type of country, but if I have to describe one of my typical client is one individual that maybe got a limited company in UK and decides that wants to move abroad for different reasons. Can be family, can be retirement, and so on. And then I analyze all the tax implication of moving abroad, or you can have the other way around. One that comes into UK, wants to invest, there is a connection, for example, with US and so on. So you try to understand what is good and efficient from a tax point of view. So the type of client, my specific type of client, they know what global mobility is. So they want to move, or they are planning to move, or they moved from a country to another country. They are not static.
Understood. Yeah. Okay. So that's kind of a limited liability company moving in or out. Good.
Yeah.
What kind of cross-border issues do most individuals or businesses really underestimate? That there's always that, oh, I didn't realize moment for most of your clients, what would that be?
So an example can be that a client may think, I will get an opinion, a tax opinion in country A about what I'm doing, then an opinion in country B, and the two answer will solve the problem. Sometimes that is enough, but often is not. The difficult part is the interface between two systems. So sometimes there are friction points that you have to consider. Residence is not always the concept, is not always understood in the same way. Permanent establishment issue can be highly fact-specific. Employment tax and social security can move in a different direction from corporate tax. Withholding tax may depend on treaty access, beneficial ownership, and so on. Transfer pricing may require not only a method, but a credible narrative about function, assets, and risk. And for private clients, the interaction can be just as complex because there is the concept of domicile, residence, remittance issues, succession, trust, inheritance tax, and so on. All they can interact. So a decision that looks efficient in one country might create a reporting problem, a succession problem, or a tax exposure somewhere else. So the value is often in translation. I try to translate the client, the commercial or personal objective into tax question, then translate the tax answer back into decision they can actually take.
Okay. You mentioned a lot there about the only thing we deal with quite often here from Malaysia to Europe to the UK is transfer pricing. When we get a lot of services done in the UK and then we get the bills through to the Malaysian side or the Singapore side, transfer pricing is a big issue, even amongst the Commonwealth, right? They're both Commonwealth nations, but it's always been an issue. We hear other terms I read about, and it seems to be a hot topic in the UK, is this EIS and seed EIS. What are those? And for founders listening, what should they understand about those schemes?
So I have to say that when I moved here about 15 years ago was something that I have to say I was really surprised. I was really surprised because it's a big way and a big opportunity to do an incentives to investors. So both of them, they are particular scheme they give to you as investor, you have the possibility to, as I said, invest money in a specific firm, and I have in some way money back. So if the enterprise investment scheme and the seed enterprise investment scheme give to you this opportunity. For example, if you buy a share of a company, let's say a startup most of the time, at £1, you sell it in after 3 years and the value is 10, you are not going to pay tax on the capital gain. That is going to be 9. It's going to be the difference between 10 and 1. So as you can imagine, this is an incredible way to incentivize the investment in a specific country. So EIS is more for bigger corporates that want to grow, but the CIS is more for startup. For the reason is a seed enterprise investment scheme. It can be extremely important for early stage business because they help attract investors, because they provide tax relief to qualify investors for the right company at the right stage with the right trade and the right documentation. They can be a genuine funding advantage. But the key word is qualifying. This regime, as you can imagine, are detailed. You need to look at the company, you need to look at the trade, the use of money, the investor, the share term, the previous funding, the timing, the control, and the ongoing condition after the investment. So my advice to the founder that maybe they want to consider to move UK is don't treat the tax relief as marketing until the technical position is properly reviewed. Get the structure right before the round of financing, not after it. Make sure that the document match the intended tax treatment. Make sure investors understand that relief is conditional. And remember, the tax incentive should support a real business. It should not be the business model itself.
Understood. So it really is a way to tax protect your capital gains.
Absolutely. At the same time, give to you the possibility to have a refund via your self-assessment when you invest in a corporate. So as you can imagine, your exposure to the risk from the very start is going to be less than 100%. So it's a good way to incentivize investing.
Yeah, definitely. There was another one talked about as well called Pillar 2. It's been discussed. Can you explain in simple terms, just like you did for EIS, what is Pillar 2 and why it matters?
So Pillar 2 is a change in the way international tax is being governed. So at high level is part of the global minimum tax framework for large multinational groups. So the policy idea is that very large groups, multinational, should pay at least a minimum effective level of tax in the jurisdiction where they operate, with top-up tax mechanism if the effective rate is too low. So if you decide to go in a country, to invest in a country, you should expect to pay at least a minimum effective tax rate. So for many business owners listening, I think the first reaction may be, this does not apply to me because I'm not that size. It may be true in a narrow technical sense, but the importance of Pillar 2 is wider than the threshold. That is, a group that at consolidated level have a turnover of more than 750 million of euro. It shows the direction of travel. Tax authority, investor, and boards increasingly wants more transparency. They want more data. They want more consistency and more evidence that tax outcomes reflect real activities. So from group within scope, Pillar 2 is not just a year-end tax computation. It is a system project, a data project, and a governance project. So you need accounting data, entity-level information, and so on. So it's something that completely changed the international tax background. So it's not all about multinational. It's also about the data that we got. So if the group doesn't know where the data is, who owns it, how reliable this type of data is, and how the tax analysis is done, is approved, Pillar 2 expose that weakness and can create potential problem to the multinational. But in general, I will say that it is a way to create a fair tax world where even if I go to a specific country that where before the tax rate was zero, now I have to pay at least a minimum effective level of tax and so on. And this is fair. Of course, you have to consider different requirements and so on, but this is the concept behind all of this.
Okay, so do you think that the international tax is becoming much more transparent, is becoming possibly, is it more complex or just more visible? What do you think? Is it getting more complex or more visible?
I think it's becoming more visible, and in order to be visible, there is much more complexities. Way more. I started about 28 years ago. The situation was completely different. Now the tax world is extremely regulated, most of the time very well regulated and so on. You have more visibility, and it's a good sign, in my opinion.
Okay, so that the transparency is there and everyone's on a level playing field. You don't have companies hiding revenue. It used to be a day when all the companies were incorporated in certain countries and all the
Yes.
revenue was through that country and all the costs were through the high tax rate country where they never
Yeah.
paid taxes. I remember a
Absolutely.
day when everyone was
Absolutely. I agree.
registered in Ireland and Monaco and a few other countries, but all their staff was in Canada or in France or something. Gone are those
Yeah.
days, perhaps, huh?
Yeah. Yeah. Yeah.
Okay. It leads me to kind of the next something that's really close to ALECA and perhaps you're getting into that space as well, or you're seeing your clients in that space, is
Yes.
ESG. And if you look
Yes.
at ESG kind of now through a tax lens, through your expertise, a lot of people think ESG is separate from finance, separate from tax, separate from their company documents. But I see them, and perhaps you see them, closely connected. Why do you think the worlds are becoming increasingly linked?
So I personally connect ESG and tax through governance and transparency. So ESG is often discussed in terms of environmental impact, social responsibility, and board behavior. Tax sits directly inside that conversation, in my opinion, because tax is one of the clearest way in which a business interacts with society. This does not mean that every business should simply pay the highest possible amount of tax. That is not the point. This is not how the law works. But businesses are entitled to structure their affairs sensibly and to claim relief and incentives that the parliament has deliberately provided. But there is a difference between responsible tax planning, which is aligned with real activity, with ESG, with policy intention, and aggressive planning that cannot be explained credibly to stakeholders. So, as ESG bring that distinction to the open, if a company says it's committed to responsible behavior, but its tax strategy is not good, poorly governed, or disconnected from the value, from where value is really created, there is a credibility problem. Investors and board understand that more than they did 10 or 20 years ago. And the links works in the other direction as well, because tax can support ESG activities, because green investment may interact with capital allowance, with research and development relief, with grants, with energy-related incentives, transfer pricing of intellectual property, supply chain structuring, and so on. If a business is investing in renewable energy, energy efficiency, green building, environmental monitoring, or sustainable procurement, the tax consequences should be understood from the beginning, in my opinion.
All right. I agree that that is a great answer. You've covered it all right there. I had about five other questions, but you've covered all of them pretty much.
Good.
Do you feel that
Good.
businesses are starting to disclose then much more today than they were, let's say, 5 years ago? Did you see a trend in your industry then?
So I have to say that it depends. Some clients are directly in energy, environmental technology, or sustainability related services. Others are traditional business that now face ESG expectation from the customers, from the investors, from the lender, or from the supply chain. From some, the key issue is, as you know, the environmental compliance. For others, it is reporting, the governance, the procurement, the data, the incentive. What is interesting, in my opinion, is that ESG is moving from aspiration to evidence. A few years ago, many businesses could speak about value and intention. That is no longer enough. The question is increasingly, where is the evidence? What is measured? Who is responsible? What has the board approved? How does the supply chain support the statement? How does the tax position support the commercial narrative? And in my opinion, this is where the tax advisors can add value, provided they don't pretend to be environmental scientists. We are not. We should stay in our lane, but our lane is wider than people think, because tax advisors, they should understand governance, they should understand incentive, documentation, risk allocation, reporting, and legal form. And those are all very relevant to ESG. For example, if a company is making a sustainability investment, I want to understand the project, the assets, the expected return, the available relief, the ownership of intellectual property, the location of people and decision making, and the reporting requirement attached to the project. This is not separate from ESG. It's part of making ESG operational.
Understood. Make ESG operational, moving from aspiration to evidence. These are all great
Yes.
taglines. I'm going to steal those. I'm going to steal those, Angelo. They're great. How about, do you think carbon taxes and carbon credits and relationships between countries that are sharing carbon credits, carbon taxes? I live in Asia, in Malaysia, and Japan has a large carbon tax, and there's none in Malaysia yet. So they want to share some government tax money. And from
Yeah.
that level, the corporations are trying to offset some of their carbon emissions in Japan by getting sequestration here in Malaysia. Those kind of agreements, what are your thoughts? Are they going to be more of those, or is that going to fail? And what are your thoughts?
I personally think that I can envisage that an increase in this type of agreement for many reasons, because we are not talking only about sustainability, but building something that is measurable. So energy efficiency programs, renewable sourcing, green building project, technology that can measure pollution in air or water. So I think that this is the trend. In my opinion, this type of agreement that can support the narrative, because the future of OFSG is also in data. If via this type of agreement, or in general via the relationship between different countries, that they won't cooperate, you can measure environmental impact in a more accurate way. And then you can regulate it more in an intelligent way, invest more effectively, and report more honestly.
Okay. Okay. Where would you see, like you mentioned, green buildings and renewable energy, environmental monitoring, all these things? They're exactly what ALECA, kind of the space ALECA sits in a way. Do you think governments are making it easier or harder to navigate or innovate in this space? Do you think governments are making it easier or harder on us?
I personally think that, of course, this is a complex topic. There are, as you know, some government, they put all their effort that they can. Others have other problems, but I'm an optimist. So what I can see is that the situation is improving. Now we understand that we need to pay attention to the environmental impact of the things that we do. So I personally think that the situation is going to improve, despite is not for all the government is obviously a priority, because maybe they have other important things to consider. In general, during my life, I have seen there is way more attention on this very important topic than it was before. And of course, everything starts from the governments.
Yeah, understood. Understood. So when you're, again, getting back to your specialty in tax and the broader shoulders of being in the finance and accounting world, what do you think, from a ESG and international tax aren't really areas where you can be a generalist anymore? That you got to be somewhat of a specialist. What do you look for when you're building a team? Because you must leverage a lot of your network. What do you look for when you're building a team?
It's a mixed skills team, as you can imagine, because those businesses are complex. So you may have research and development issues. So you will need someone that good skills from this point of view. And cannot be me, because I'm a tax advisor and so on. So you need someone, an engineer, a scientist, and so on. Capital expenditure you can have, and this is a specific branch of the taxation world and so on. You will need also someone that knows about intellectual property and the exploitment of intellectual property. Cross-border licensing, this is important as well, and maybe you will need a lawyer. Transfer pricing, that is something that I do daily. Supply chain question, and as you can imagine, you will need probably supply chain supply chain advisor, and then investor relief question. So you will need a team that is able to take into consideration every different aspect, because as team of advisor, you need to understand the business model, not just the tax return. So, and in this field, I have seen that the client that I got in this field are the one that combine innovation with discipline and so on. They know the good technology, at least in this field, is not enough. They need governance, they need documentation, they need funding structure, they need tax planning, but they need compliance, and they need to be credible, and they need to understand what are the needs of the different stakeholders.
Yeah, I agree. Innovation with discipline, compliance, and credible. These are
Yes.
keys. These are keys. I'd like to look forward now. I'd love to finish off a little bit here by looking ahead. when you say, when we say ESG regulation, international tax rules, and corporate reporting and finance and everything, they all seem to be moving kind of in one direction. Where do you think they're heading in the next 5 years? 5 years ago, the land was looking a little different. Today, it's where we sit today, but where do you think we're going in the next 5 years?
So I think that we have an opportunity. We can turn compliance into credibility. Good compliance, we know that is not only defensive. It can make a business more investable, more resilient, and more faster. And it can also help management to understand the business better. So for business leaders, I've seen that when they think about this ESG obligation, they start with the facts and they start with the relevant question that, in my opinion, is: what do you do? Where do you operate? What do you measure? Who is responsible? What risk matters? And what are the right positions to be taken into consideration in order to improve the efficiency of my business, but at the same time support all the ESG narrative? So I think that starting from the regulation, you can create something better.
Okay. I like it. That compliance into credibility and just making a positive, I guess we call it a positive story where your transparency,
Yes.
it's almost like a suit of armor. It's a suit of armor by being transparent and it's not being vulnerable. It's actually helping protect your brand and protect your vision. So yeah, that's exactly the way we think of it as well. Angelo, it's been a fascinating conversation. You've given me a lot to think about.
Thank
And
you
the
very much.
listeners, that's appreciated. We've covered everything from your international journey into tax through cross-border business, ESG, what the future looks like, sustainability, and where regulation is heading. Thank you so much for joining us today and sharing your experience. You're a wealth of knowledge, and you're based in the UK. Your company's called Vectigalis Tax. You're on LinkedIn. That's how I found
Yes,
you.
please.
Thank you very much for replying.
Yeah, thank you.
And thank you to everyone for listening at ALECA Talks. We're going to come back with another episode here with more content like Angelo. But for today, thank you very much, Angelo, for joining us.
Thank you.